Hello guys, welcome back to the channel Gyaan Valuable. Today in this episode we will be researching about TPL PLASTECH Limited. So this is again a microcap company and we are into a series of analyzing some good companies which are fundamentally strong, and I'll be just using the AI feature of screener.in to analyze whether the company is good for investment. So let's begin this video. So yeah, and so this is what TPL PLASTECH Limited you can see on the screener.in. The screen is visible, and here you can see we'll be first, as you know, in all our videos. So we will be analyzing first what the business model is about the company. So it's all about it holds, its manufactures and sells polymer products, and mainly it manufactures drum containers with the capacities of the given liters for specialty chemicals, paints, inks, that is pharmaceutical products, fast moving consumer goods. So this is a packaging company for all these industries, that is specialty chemicals, paints, inks, pharmaceuticals. So they are majorly into manufacturing of drums. They have their production facilities in all these locations. Expansions, okay, they are entering into intermediate bulk container with the commencement of its new industrial packaging manufacturing facility at Dahej, Gujarat. Okay, so they are into capex. Their capex have one good amount of chunk towards automation, debottlenecking at existing plants. Okay, so these are the things. Okay, they have some subsidiary. So yeah, the basic thing is that this company is into manufacturing of some of drums which are used in specialty chemicals, packaging industries, that is paint industries and pharmaceutical industries. So this is what the fundamental business of this company is. So let's see its quarterly performances till now, how it has been performing. So you can see there has been steady growth in the revenue quarter on quarter. So this is a good sign of this company, and the net profit, operating profit is also fine. Net profit margins, you can see it's stable. Okay, no issue. And PAT is also increasing. So this is a good sign for this company actually. Then the yearly financials, you can see the year-on-year growth. Yeah, there is a good steady growth in revenues, and the PATs is also good increase. Okay, fine. Now coming to the balance sheet, where we'll be analyzing what is the equity reserves they maintain. Yeah, so the reserves are steadily increasing. It means the profit is the what the company is earning, they keep it with them. So mostly the company is reinvesting the profits which is earned in the business again. And borrowings, there is a chunk short-term borrowings of 16 crores. I think this might be the working capital requirement of the company, might be. Okay, and other liabilities includes the trade payables is the major amount here. Okay, that should be in fixed assets. You can see there is 94 crores of fixed assets. Majorly, it might be the buildings, plant and machineries, equipments, etc. And so the investments, they have low investments here. Okay, they have cash equivalents of 6 crores. So the trade receivables is again a higher amount here. So inventories is also high. So that thing, it's something which is we need to think on how the inventories is managed here. We need to analyze because the trade payables are also higher, the trade receivables are also high. So you can see the same 60 crores of trade payables and 61 crores of trade receivables. So there is nothing much in this. So in this cash operating activity, so it's a positive one. So okay, the company is earning something from the business and there is a positive flow from the business. And investing activity, you can see negative flow because the company is actively into fixed assets purchased. So there is a major crunch going there. It's a good sign the company is investing in the business, they are expanding its business into new fixed assets. So that's a good sign. Okay, the cash for financing activity, there might be some dividends being paid. Yeah, it's paid, and some interest due to some capital, some borrowings are there. And they have borrowed money in the month of March. So I think the money which has been borrowed is mostly used for purchasing the assets. So you can interpret the data like that. So yeah, so company has borrowed money to invest into some new plants and machineries so they can expand their business. So from the initial preliminary analysis, we are coming to this informations. Next, debtor days. So it's huge, 60 days. It's normal. Okay, 60 days, it's normal. Earlier it was very higher, now it has reduced, so it should be low. So the money which is being the amount when it is sold to a customer, within how many days the money is coming back to the company. So it's 62 days, nice one. And they are paying early. So the days when it is payable, it's 49 days. And inventory days is 81 days. So the company, when it manufactures a product, it takes 81 days to complete that as that is inventory into a finished, into cash, ultimately into cash. So working capital days is 62 days, fine, it's not a big one. It's a decent one. Fine, okay, that's no issue in that. Coming to promoters holding, it's been stable over the years. Nice thing. FIIs, there is nothing in FIDIIs. Okay, so we'll just now have seen all these things. We'll analyze what the company's growth look like, because the growth is the major thing which drives a company's share price. So how the company's stock is going to perform. So we'll just click on this and analyze what the company's expectation in the future is. So here you can see the recommendations which has been given by the AI is it says hold or accumulate on dips. So not a slam dunk for 20% CAGR, better for 12 to 15% steady growth. Okay. So it's a good sign. It's an average growth company. So it will be giving you around 15 to 20% yearly. It's a decent one, not a very rubbish one. So it's achievable. And implied 1 year upside, so it says 85 to 90%. There is a target of 125 on this stock. So technically there is a good sign on this stock. Markets mojo, they say it's a sell, so cautious. Valuations, quality, plaques. Okay, so these are all the suggestions from the in the market views. But it's a decent company. From my analysis, I can see it's a decent company. It is steadily growing, and it's good for accumulating when it is the dips. When you find any dips, just accumulate, not a big amount. It's a micro cap company, so you can just try to accumulate small amounts whenever you find any major dips. And it's also giving some good dividend, not a good dividend, but yeah, recognizable dividend. So it's a good thing. Wait, then yeah, so this is what I have coming to a conclusion, that this is overall a good, decent company which is steadily growing, and the business is also attractive because it caters multiple, that is multiple industries. So fine, okay. So thank you for watching the video. If you have any comments, please comment your suggestions in the comment box below, and please subscribe to the channel, like the video, share among your friends, and hope this video was informative to you all. Thank you so much for watching. Bye bye.